Welcome back everyone, I hope you're doing well, and in this video, we're going to take a look at 3 stocks from the sector Jim Cramer believes will continue to grow throughout 2021 and is making a comeback right now. Jim Cramer is a lead analyst on CNBC, he's the host of the show Mad Money, and people love him or hate him, but he gives his opinion on the market and which stocks he believes will continue to grow going forward. And he just made his latest prediction that the healthcare sector is making a comeback, and there's a few big names to take a look at on the market right now that are trading at very reasonable valuations and offer investors a lot of upside potential. So in this video, we're going to focus on 3 names in the healthcare sector, go over those companies' current financial position, their dividend growth, and their company's future growth expectations. But before we do that, I'm going to ask you to please hit that like button and subscribe. I am the Gen Z investor, and every single day we talk about the stock market, going over different stocks you can buy and any major market news. So please hit that like button, subscribe for the daily videos, and today we're going to focus on 3 stocks in the healthcare sector that Jim Cramer believes will continue to grow throughout 2021 and beyond. And stock number 1 is ticker J&J, Johnson & Johnson. The company currently trades for $160 per share, and that is up 9.5% over the past year. They have a market cap at $421 billion and now sit with a very reasonable forward PE of only 16.8 and a dividend yield of 2.5%. So this is one of the leaders of the healthcare sector, and in 2020, they generated over $82 billion of total revenue, and that's made up from 3 different business categories, which include worldwide consumer health sales, made up of products from Tylenol, Aveeno, Listerine, Band-Aid, and many more, $45 billion from their big pharma sales, and the remaining $23 from their medical devices. And J&J has a very wide, diverse product mix, and the company's not solely reliant on 1 or 2 brands to derive a majority of their growth. And we can see in 2020, they had 28 brands/platforms generate more than $1 billion in annual sales, which is extremely impressive. 16 of their products had over $1 billion of revenue, and 12 generated over $2 billion. So we can see right here that of their $82 billion of total sales are not coming from one individual sector or product across the entire J&J umbrella. And we can see going forward, the company's projecting total adjusted sales to reach around 8 to 9% growth in 2021, so very big numbers from this major healthcare player. And as a dividend investor, we love to see companies who continue to grow that payout every single year, and Johnson & Johnson has one of the longest active dividend growth streaks at 58 consecutive years, making them a dividend king. So right now they have a yield of 2.5%. They only pay out around 42% of their net income, which is very low and extremely sustainable, and their average dividend growth rate over the past 5 years is at 6.13%. And even after 58 consecutive years of dividend growth, Johnson & Johnson still maintains the highest dividend safety score possible, coming in at a 99. It's considered very safe, and it's extremely unlikely that we see a dividend cut coming from J&J anytime soon. And with this company, they also have a low beta of only 0.51, meaning you can own this passive income player, collect your growing dividend every single year, and the share price will not be too volatile within your portfolio. And now if we move on to the company's financials, J&J has been posting consecutive years of revenue growth to over $82.5 billion in the trailing 12 months. And they do maintain a high level of profitability with over $14.7 billion of total net income over the past year. But for a dividend company and as a dividend investor, we want to own the names that are able to grow their cash flow every single year, because dividends are paid out in the form of a cash payment every single quarter. So we can see a company like Johnson & Johnson has been able to grow their total free cash flow from $17.7 billion up to $18.5, then $19.9, and now in the trailing 12 months, they have generated over $20 billion of total cash flow. And their annual dividend payments of around $10.4 billion makes up just over half of the company's total cash, meaning they can continue to grow that payment and reinvest and grow their business. And going forward, analysts are forecasting over 8% annual share price appreciation, add in that 2.5% dividend, anywhere between a 10 and 12% projected annual growth rate coming from Johnson & Johnson. And the company right now is considered a slight strong buy, coming in at a 1.9, and the current share price at $160 is well below the 12-month expectation of $185. So Johnson & Johnson is definitely a company worth taking a look at. They are a leader in the industry, and as a dividend king, they continue to grow that payment every single year to their investors. And now we're going to continue on into the second healthcare company we're going to take a look at in this episode, and that is ticker UNH, United Health Group. They currently trade for $390 per share, and over the past 12 months, the company's up by over 38%. They have a market cap at $354 billion and trading with a forward PE just above 20 and a dividend yield of 1.33%. So of course, this is a major healthcare company that operates within four main business segments, which include United Healthcare, Optum Health, Optum Insight, and Optum RX. And they provide different insurance, pharmaceutical, and medical services across the entire country. And if we take a look at their dividend, right now, the yield comes in at 1.33%. They are only paying out a very small percentage of their earnings at 27%. And this is a massive dividend growth company, averaging over 20% annual dividend growth over the past 5 years. So although your starting dividend yield is on the lower end at 1.33%, that amount is compounding at a terrific rate of over 20% per year. And this company offers investors a lot of long-term share price appreciation as well. And over the past 5 years, the share price has grown at 193%. And if we take a look at their dividend, it has the highest dividend safety score possible, coming in at a 99, so extremely safe and very unlikely that UNH cuts their dividend anytime soon. And if we take a look at their financials, every single year, the company's total revenue is expanding at a decent rate, and they have now surpassed $257 billion of total sales in the trailing 12 months. And if we take a look at their profits, those continue to grow as well, and we can see year over year, they continue to set new record highs with over $15 billion of total income over the past year. And taking a look going forward, the company's forecasting total revenue to surpass $277 billion throughout 2021, and their total earnings per share are projected to hit anywhere around $17. And going forward, they have done a terrific job of increasing their cash flow, similar to Johnson & Johnson, every single year. And as dividend investors, we love the companies who continue to grow their free cash flow every single year. And we can see from $11.5 billion, they grew that to 13.6, then 16.3 billion, and finally in the trailing 12 months, they have generated over $20 billion of total free cash flow. So a lot of capital to reinvest, grow the business, and continue to expand. And their dividend payments of $4.5 billion make up less than 25% of their total free cash flow. So a lot of sustainability and growth coming from UNH going forward. And if we take a look at the future projections, analysts are projecting 12.4% annual share price appreciation, and the company at $390 is below the 12-month expectation of $407 and is considered a strong buy, coming in at a 1.8. So definitely another company in the healthcare sector if you want to own some of the leaders with very strong financials, nice profitability, growing free cash flow. UNH is definitely a name to take a look at for your own portfolios. And now we're going to move on into the third and final company included in this episode, and that is ticker LLY, Eli Lilly. They currently trade for $186 per share, and over the past year, the company is up over 21%. But we can see from a high point of $212, over the past few weeks, they have gone through a downtrend and now sit at a much more reasonable level at $185. They have a market cap at $166 billion and a dividend yield of 1.86%. And if we take a look at their latest quarterly report, the company was able to grow revenue by 22% year over year, and their year-to-date sales are up by over 10% as well. And they have very high profitability with a gross margin of 78% and an operating margin of 33% as well, which is very nice for a big healthcare name. And the company's executives have a strong focus on creating long-term shareholder value, and they just made a recent acquisition to enter into the gene therapy space. And if we take a look at their 2020 capital spending, we can see the company's prioritizing growth of the business before the shareholder return at this current point in time, which is exactly how you want to see it for long-term sustainability of a growing company. They spent the most money on research and development at $5.2 billion, some capital investments, some business development, and of course they do pay out a growing dividend, which they spent around $2.7 billion on, and some slight share purchases of around $500 million. And going forward into 2021, Lilly's projecting another 11% growth in total sales to between $26 and $28 billion, and I would be very happy if this company can continue to grow annually at 10 to 12% per year. And if we take a look at their dividend, they have a yield of 1.86%. They only paid around 41% of their net income, and they've been growing that payment, averaging 8.8% annual dividend growth for over 7 consecutive years. And like the other two companies we've already gone over, they have a very safe dividend coming in with a 96. Their last dividend growth was at 15% annually, and a company with, again, a low beta of only 0.54. So for all the names in the healthcare sector, they pay out very safe dividends, they're growing at a decent rate annually, and the companies are not very volatile relative to the overall market, and actually may make a nice addition to a growing dividend portfolio. And if we take a look at Lilly's financial statements, we can see that total revenue is only growing at a slight rate year over year, nothing drastic, but like for all the other companies, if we focus on the cash flow as well, over the past few years, the company has been growing cash flow from $2.5 billion up to $3.4, and now in the trailing 12 months, they've generated over $4.47 billion of total free cash flow. So annually, they continue to grow, expand their business, and generate more cash in order to focus that back into research and development or paying out a dividend every single year. And over the next 5 years, analysts are projecting 11.6% annual share price appreciation, so a high double-digit return expected from Lilly. Add in that dividend, this could return anywhere from 12 to 15% per year going forward. And the company is considered a buy, coming in at a 2.2, and the current share price of $186 is well below the 12-month expectation of $215 per share. So definitely another interesting healthcare company to take a look at for some growing dividend income and some long-term share price appreciation. So now we're going to wrap up the video. We've gone over 3 companies in the healthcare sector, which Jim Cramer believes are coming back and will continue to grow going forward. We took a look at Johnson & Johnson, the sector leader. We have United Health, and of course, Eli Lilly. So 3 big name companies who all pay out extremely safe dividends. They're growing at a fast rate every single year. And if you're looking for some exposure to the healthcare sector, 3 companies to definitely take a look at right now. So thank you for watching to the end. I am the Gen Z Investor. We talk about the stock market every single day. So please hit that like button, subscribe, and join the community. And I will see you in tomorrow's episode.